Alright, so guys, just a market review for Friday. Okay, on a daily, as I've mentioned, this volume imbalance with this gap over here gives you a very high probability of the price rejecting from this area. Furthermore, if you use a fib, swing high to swing low, that is above 50%, which is very nice with your confluence. Okay, so price on Friday closed back into this fair value gap, although it opened above it. I think this signals for maybe we want to take out this equal lows right here. We do have a small volume imbalance created on the daily here. Heading into next week, we have CPI and Fed's interest rates announcement. Okay, so this is the small volume imbalance. If it was to reverse, I think this should act as support, or maybe we can reuse this order block with confluence of this fair value gap yet again, like previous days or weeks. Okay, so what I was looking at on the 15-minute chart today, on Friday, we had this move down at 8:30 news driver, and we created a fair value gap here, right? So this fair value gap is quite big, so if you draw it out, it actually is actually very hard to pinpoint which point you should enter. So for me, I use the fib, swing high to swing low, right? We have about this range, and I'm looking at areas only above 50%. So the first area I have was this breaker over here and this order block. Okay, so for this breaker, I would much prefer to use the 1 hour because it gives you a better guide. Like over here, right, these two down candles are the breaker, because for the 15 minutes you can see that there's two sets of down candles separate from each other. So for the breaker, I would prefer to use the 1 hour, and on the 1 hour we do have a fair value gap as well. So when we close the 9 o'clock hourly candle, it created a fair value gap over here. So since the higher time frame is much more higher in terms of hierarchy, and the lower time frames will be subordinate to that, I switched my reference chart to the 1 hour chart. Okay, so on a 1 hour chart, we have this fair value gap, right, and we have this breaker down here. If you use the breaker, right, this is the high, this is the low. So this breaker range, price should not exceed this breaker, okay, if price was to remain bearish. So what's within the breaker range as well? We have this order blocks low, which is the fair value gaps high. the high range of the fair value gap, and we have this order block open. So on the open, the value is at 4011.5. the high of this candle is 4011.5, so it's a perfect tap, and then in reverse. This is a very nice setup, okay, because previously we swept the relative equal highs over here, we swept it into the volume imbalance on the daily, and with regards to the high end of the opening gap, the previous month days daily chart, right? So we broke down this swing low over here, which is why this is the breaker, okay, And as you can see, if you just want to use this area as your context, this is W, right? 1, 1, 2, 3. So when the price takes out this high and it breaks down, the last down close candle before the move up to take out this high will be your breaker. So over here, 1 hour fair value gap is pretty neat, right? As you can see, price closed within this fair value gap. The bodies are expecting it very well, right? Very nice. Okay, so over here, if you were to find some short setups on the 15 minutes, it's doable, but I think the 5 minutes has a better has a better clearer setup. Okay, so price, as you can see over here on the 5 minutes, I was looking at how the price action plays out. Okay, so we have one swing high, right? 1, 2, 3. So this is like a three drives, and then it broke down the first swing low here. Okay, this is the first market structure shift off from this phantom trend line. Okay, so this is the shift. Do you have a fair value gap over here? Yes, we do have a fair value gap that lies here. So we have the very small fair value gap over here. So this is the fair value gap, right? Even though price overshot by a little bit, it did not trade above this swing high, which would be the stop. Okay, so the trade idea initially that I had was to take out this low here. So because the price is quite lethargic on the way up, so because I expected like a quick down move, but it gave a grind up, that's why my target was just here. So if you take from this order block to this swing low here, that would be a 10R, right? Almost a 1% gain. I mean more than a percent gain from that high here. Okay, so and if you just use the rejection blocks, let's say, yeah, if you just use the rejection blocks on the 15 minutes to this level here, that is 7R, still very nice reward over here. Okay, so this was the setup, but for me, I played on a 1 hour chart, so technically I entered this breaker's open and my stops are above this breaker, and I did not average in at this area here, right, because my account size wasn't that big, but it's okay. I got this move down, and I think I closed around 2 a.m. New York, because the thing is I need to sleep. So I was looking at this 15 minutes fair value gap over here, very neat. First of all, I need to sleep. Second, it's Friday. If it is a Thursday, I'll let it run. I wouldn't close my positions, and maybe I'll put my stop loss above this swing, above this down candle. Okay, I mean up candle. But the thing is, it was a Friday and market is going to close at 4, so at the same time I can't manage my trades. That's why I closed it at around 2. Okay, these 2 candles here, right? Eventually price did break down at after 3, which is usually the case because the last hour before the market closes are usually where the algorithm likes to spool. So from here, 3 candle close, and we got the 315 candle here. It just broke down all the way right into this, what was this level again? Oh no, this is just a new level. Okay, so anyway, price broke down into the low end of this fair value gap, of this daily fair value gap, just shy of this low here. So I'm thinking this low could be the next objective surely, but I'm looking at the daily equal lows that could set up. I mean, that could be the ultimate draw if we were to go lower next week. Okay, I'm not too sure because we have CPI and we have Fed interest rates, so these two events are very volatile, and usually they are just manual interventions, so I'm not too sure what they're gonna do with the price, so I'm just leave it as that, right? So overall, was a very nice trade, right? If then at the point you kind of miss this trade, there was another trade set up, which would be right over here. Price took out this swing low, did not create a fair value gap, however, after which it created a up candle. So this up candle created a swing high, and then it broke down, creating a fair value gap right here in this 5 minutes chart. Okay. So what this candle, that the candle that created this the fair value gap, broke this swing low here. So this is actually a valid setup. It just takes longer to play out, as you can see over here. The fair value gap is respected. Okay, and your stops will be above this up candle here, right? So if you draw the fibs from the previous swing high to swing low, that's above 50%, the fair value gap. And if you draw it over here as well, it's above 50%, it's way above 50%. And even if you use this most recent swing low as your range, it's still above 50%. Okay, which is very nice. Like if you can capture this move down here, still a good trade, right? Let's say you just entered on a fair value gap into the rejection block, and then your stops is above this up candle here. That's a 5R. It's a really good reward to risk ratio. So moving forward, I'm just gonna look for price action like this, right? This is technically the ICT 2022 YouTube mentorship model. Okay, buy side taken, broke down, creating a fair value gap, but you sell any retracements back into the premium, and then you look for it to take out minimum this swing low down here. I mean the low that was created by this fair value gap candle. Okay, yep. So that's all for today. For next week, let's see what we have. The hourly candles, the hourly price range is very neat. I'm just gonna remove everything here except for this, right? So we have this daily volume imbalance, which could act as resistance if the price gaps lower, and if it gaps up, I think this is support back up into this area here, this 1 2 3 order blocks. So I'm just gonna mark up this order block, right? We do have this fair value gap down here, but I'm not too sure if it wants to use this, and at the same time we do have this data gap here. Okay, so it could be this gap coupled with this order block, right? From the swing high here, swing low, yes, it's above 50. Last order block down is above 50 as well. So this could be a very nice setup if prices comes into here and then continues lower. Okay, I'm not too sure if that's gonna happen because of CPI, and there's also Fed interest rate announcements. Okay, right. Moving on to the daily. Right. If the price wants to take out these lows here, I would expect it to open lower on Monday. The announcements is on, let me just take a look. where's the dates? Alright, so CPI is on Tuesday, announcement is on Wednesday. Okay, so yeah, Tuesday and Wednesday, maybe classic Tuesday, Wednesday, high slash low, not too sure, but could play out. And then after that, what, Thursday reversal? Maybe, just maybe, right? So yep, I think that's about it. On the weekly, still considered bullish, it's just that it traded beyond this candle here, could act as another block, possible. Just gonna annotate it. Trade in this area as well, but this is too close, not that interested. Okay, yep. We have this on the daily as well, I mean on the weekly, and on the daily can't really pinpoint anything. Monthly, right, we have this fair value gap for this month. Maybe if it can close below this, maybe it can move lower for the next year, but yep, so far nothing much. I want to see what happens on Tuesday. I won't trade on Tuesday most probably, right, but I would very likely trade on Wednesday. My plan is to trade after the announcement, which is I think after 2:45. The announcement is at 2 if I'm not wrong, because for FOMC news like this, usually you get there's two parts to it, as ICT have mentioned. There's always two parts. The initial part is always the Judas swing. Okay, right, we have announcement at 2, and then after that we have the press conference at 2:30. So I really want to look at 2:45, right? That's all.